Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Alibaba's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Alibaba is a giant internet retail company. It has three main websites: Taobao.com, Tmall.com, and Alibaba.com. Taobao.com offers customer-to-customer services where individuals or businesses can sell items on the site. It is similar to eBay, where it acts as an intermediary between buyers and sellers. It does not warehouse products and deliver them like Amazon does. It is consistently in the top 10 most visited websites in the world. It has 280 million active users and an 86% retention rate. Tmall.com offers business-to-consumer services. Only the brand owner or authorized dealer can operate a Tmall store. For example, Tencent may use Tmall to sell its products. I would not be able to sell Tencent products on Tmall.com, but I could sell them on Amazon. Alibaba.com is one of the world's largest business-to-business marketplaces. Any company can sell on Alibaba.com, including Chinese, American, German, etc. Most transactions are processed using Alipay, which is similar to PayPal, although PayPal's total transactions is a fraction of Alipay. Baba is one of the largest, most valuable, and most identifiable brands in the world. It has 1.3 billion active users on its different platforms. 300 million of those users are not in China. The company is headquartered in Hangzhou, China, and was founded in 1999. The ticker trades on the New York Stock Exchange, Mexican Bolsa, Deutsche Börse, London Stock Exchange, Xetra, Vienna, Swiss, Buenos Aires, Hong Kong, and Bulgaria Stock Exchange. Let's get started with the model. This is a large cap company, 281 billion market cap. They're trading at 105 a share, and they have 2.7 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They generate tons of free cash flow. It was highest in 2021 at over 30 billion, but in the trailing 12 months it's 21 billion. Their accounting year ends 3/31. So when it says actual year 2021, that's April 1st, 2020 through 3/31/2021. Their trailing 12-month number is for the entire calendar year of 2021. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that is lowest in the trailing 12 months at 9.2 billion. It was close to 23 billion in 2021. Revenue is a sales for the company, and that grows at an unbelievable pace from 60 billion to 133 billion. Doubling from 60 billion is an amazing feat. Doubling your revenue from 1 million to 2 million is so much easier than doubling your revenue at these numbers. This is the company's income statement. They report their financials in Chinese yuans. If you want to convert to US dollars, you can just divide any number by 7. Their revenue is over 800 billion yuans in the trailing 12 months. Below that is the cost of revenue. These are all the expenses directly related to generating the revenue. All the expenses to maintain their platform are part of cost of revenue. Revenue minus cost of revenue gives you your gross profit, and that was highest in the trailing 12 months. Below that is their operating expenses. Marketing is a big operating expense for them. And below that is their operating income, which was higher than 2019, but lower than 2020 and 2021. So it seems like their expenses are getting higher. They received 21 billion of interest on their investments, and they paid 5 billion of interest on their debt. The reason they earn so much interest is because they have so much cash going through their business. And each night they earn interest on the cash that's sitting in their account. Even though the cash has to be moved from one client to another, they still earn interest on that. Below is their other income and expenses. These are all the gains or losses not part of the company's core operations. A big negative is likely an asset impairment, and a gain may be the sale of an asset. Below that is their pre-tax income, then their taxes. Then you have earnings from equity interest. These are their earnings or losses on their investments in other companies. Their net income was low in the trailing 12 months at 58 billion. when compared to 2020 and 2021. This is the company's income statement directly from their financial reporting. And this shows us the 9 months ending 2021 in US dollars and ones. Also the 9 months ending in 2020, the last quarter of 2021, and the last quarter of 2020. In the fourth quarter, their revenue is 243 billion ones, or 38 billion US dollars. 172 billion of that revenue is from Chinese e-commerce. 16 billion is from international e-commerce. The future is the cloud business, and I think that's going to grow a lot over the next several years. That was almost 20 billion. Chanyao was 13 billion of their revenue. This is a logistics company started by Alibaba. It handles all the delivery of its packages. And they received 8 billion of digital and entertainment. And everything went up year over year except customer management. This is mainly the ad space it sells on its different platforms, but it only went down 1%. Its international growth is amazing, 29%. The cloud grew 20%. It spent 2.5 billion of product development. Sales and marketing is 5.8 billion. 1.3 billion of general and administrative expenses. This is payroll for support functions. And it looks like they passed through lots of goodwill impairments, almost 4 billion US dollars in the fourth quarter. They received nearly 3 billion of interest on their investments. So in the fourth quarter alone, their net income was over 3 billion US dollars, or 19 billion ones. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. So you could think of operating cash flow as net income converted to cash, because net income is your accounting profit or loss. It's not actual cash. So they generate tons of cash, 174 billion ones. In 2021, it was 230 billion. That's well over 30 billion US dollars. And they do spend a lot on CapEx, investments in property, plant, and equipment. Operating cash flow minus CapEx gives you your free cash flow, and they have tons of free cash flow. They don't pay a dividend. They're constantly growing the company, so they're putting it back into the business to grow it. They're growing organically and through acquisition. They acquire lots of businesses. As you can see in their investing cash flow section, it's so high. This blue line is their revenue since 2015. That is just unbelievable growth. It's getting close to 1 trillion ones. And their operating cash flow also grows nicely. They're bringing in tons of cash. Their revenue is projected to continue growing at a pretty strong pace. And their operating cash flow is to remain fairly steady. This is the equity section on their 12/31 balance sheet. And these numbers are in US dollars. They have 153 billion of equity. They raised 65 billion from selling their business. And they profited 91 billion from running their business. Accumulated other comprehensive loss are unrealized losses. If they were to realize these losses sometime in the future, they may have to pass through a $4.8 billion loss on the income statement, which is fairly small when you compare it to the grand scheme of things. Let's look at the capital structure. 156 billion of equity, 22 billion of debt. They're 87% equity, 13% debt. And they could pay off all the debt with the cash on their balance sheet and still have 57 billion of cash left over. So they have tons of cash. This blue line is their equity balance since 2015, and it just keeps going up. This red line is their debt balance, and they consistently have more cash on their balance sheet than they have debt. So they have a really impressive capital structure. I gave them the highest whack on Finbox, 10.5%, because I'm trying to be as conservative as possible. And that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 431 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $390 billion. We divide that by 2.7 billion shares. And we get a calculated stock price of 145. They're trading at 105, so they're trading at a 28% discount. It's a buy according to the model. Their revenue is projected to grow 12.5%. I lowered that to 2.5%. I'm trying to be really conservative. So I grew their revenue 2.5% for the next 4 years. That's how I got their future revenue estimates. To get their future free cash flows, I need to see what percent of their revenue they convert to free cash flows. So I summed up these 4 free cash flow numbers and I divided by the sum of these 4 revenue numbers. That comes out to 23%. So I multiplied their future revenue estimates by 23%. That's how I got their future free cash flows. I bought more Alibaba stock this morning I know it's risky because it's a Chinese stock, but it's so undervalued. The market cap should be over $1 trillion for this company. If it was a US company, it would be well over $1 trillion. Even with the geopolitical risk, I still think it should be trading closer to $1 trillion. But the reason I'm coming out of the stock price lower is because I made multiple adjustments to my model to try to be a little more in line with the market. The website Simply Wall Street values the company at 181. They're saying it's 41% undervalued. 23 analysts priced this stock and the average price target is 180, the low is 135, the high is 250. This is where the stock has been trading the last 5 years. The stock grew a ton through the end of 2020. This stock, similar to all Chinese stocks, have crashed, and it's down well over 50% from the top. If you invested in this stock 5 years ago and the S&P 500, by the end of 2020, you would have been up 200% on this stock and only up about 45% on the S&P. But as of today, you'd be up only 18% on this stock, while you'd be up 82% on the S&P. They have a low beta, 0.83, so the stock is not volatile. It's down 55% in the past 52 weeks. While the S&P is up 13%, the 52-week low is 100, the high is 245, and the stock is trading below its 50-day and 200-day moving average. This is a really popular company. Over 20 million shares are traded each day. Of the 2.7 billion shares outstanding, 1.9 billion are on float, 20% are held by institutions, and 1.7% of the shares are shorted. Their employee count was growing steadily up through mid-2020. Then it just shot up. This is probably through an acquisition, and it's been steady since then. If you invested $10,000 into this company in 2014, you would have been at over $30,000 at the end of 2020. But if you're still holding on, you'd be at $11,400. That's only a 2% annual return. 36% of the shares are held by the general public, 35% by institutions, 25% by public companies, 3% by insiders, and 2% by private companies. The big Japanese fund SoftBank owns 25% of the stock, then Vanguard, BlackRock, Jack Ma, and APN. Let's look at their financial ratios. Their PE is decent at 30, that's stock price over earnings per share. They have a really good price to sales of 2.1, that's stock price over sales per share, and a really good price to book of 1.8, that's stock price over book value per share. Let's look at their non-current assets. All these numbers are in US dollars. 42 billion of goodwill. Goodwill is the premium you pay when you acquire another company. 9.7 billion of other intangible assets. This could be copyrights, trademarks, or computer software. 26 billion of property and equipment. This may be real estate for its corporate offices. 34 billion in equity investments. These are their investments in other companies. If a company owns between 20% and 50% of another company, they usually use equity method accounting. 18 billion of receivables. This is how much money other companies owe them. And another 41 billion of equity securities. I'm not sure why they broke out the two equity investments. Let's look at their non-current liabilities. This is also in US dollars. 559 million of deferred revenue. This is when a customer prepays for a product or service before Alibaba delivers it. When Alibaba sends the customer the product, then they'll take this off their balance sheet and book it as revenue onto their income statement. 9.8 billion of deferred taxes. This will increase their tax bill in the future. 5.8 billion of debt, and 15 billion of notes. They have a decent return on invested capital of 9%. They can cover the interest payments with their operating income more than 14 times. Their ROE is 6%, and they have a good current ratio of 1.6. That's current assets over current liabilities. Let's look at their current assets. These numbers are also in US dollars. 46 billion of cash, 29 billion of short-term investments. These are highly liquid investments like commercial paper. 6.3 billion of restricted cash. This is cash that's set aside for a specific purpose. For example, to acquire another company or to buy a factory. 2.6 billion of equity investments. If a number is in the current asset section, it means these assets can be converted to cash within 12 months. If it's non-current, that means the asset can be converted to cash beyond 12 months. And 22 billion of prepayments and receivables. This is how much money other companies owe them. Let's look at their current liabilities. These numbers are also in US dollars. 1.2 billion of debt. 4.2 billion of income tax payable. This is how much money they owe the government. 44 billion of accrued expenses and accounts payable. This is how much money Alibaba owes others. 4.4 billion of customer deposits and 10 billion of deferred revenue. They generated 21 billion of free cash flow in the trailing 12 months, and they have 42 billion of working capital. So the company is really well funded. The best way to look at ratios to compare them to companies in the same industry. There are 51 companies in the same industry as Baba, and Baba ranks second in market cap. Only Amazon is bigger. They spend a lot more than average in CapEx, a lot less than Amazon. They have a really good debt to equity ratio. They generate more free cash flow than anyone. All these numbers are in US dollars. Their price multiples are really good. Their PE is 30, Amazon is 47. Their price to sales is 2.1, Amazon is 3.3. And their price to free cash flow is a lot better than average. They generate a ton of revenue. Look at JD.com. They generate more revenue than Alibaba. And I just double checked. That is correct. That is the correct revenue number for JD. And look how much they're growing, Alibaba, 34%. The only reason it's lower than average is because some companies have a really high growth rate, so it's dragging up the average. But they're growing more than Amazon and JD, not Pinduoduo. It's just a lot easier to grow when your revenue is so low. When you break through that $100 billion barrier, it's hard to grow at a fast pace, but they're still doing it. Their ROA is 4%, that's net income over assets, and their ROE is 6%, that's net income over equity. To summarize, I have them trading at a 28% discount. This is like if you want to buy a car, and this car you really like costs $40,000. It's a little out of your price range. And then you find a car dealership willing to sell that car for $10,000. The same exact car, no tricks. That's what this is. But of course I understand people are concerned about investing in Chinese companies. If that's the case, then just avoid it. Don't stress out. I think it's a really good value, and I'm willing to take that risk. I rank their free cash flow 7 out of 10, their revenue 10 out of 10, and their ratio is 5 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.